guys, this is Pedram Raufi and you're watching the markets review of the day. As you know, during this program we're going to check the situation on the markets. We're going to start to check different type of charts of stock market main indexes, and then we're going to continue the program by Forex pairs charts, analyzing of technical factors, and of course the fundamental factors as well. We won't forget about them and we will check them all. News background. As you know, we are going to start from the analyzing of news background around the world, and we're going to finish our today's review by the checking of the prices of cryptocurrency market like Bitcoin and Ethereum, the main cryptocurrency assets. All of these assets, actually, we have them on our main MetaTrader of Gerchik Co, and you can actually download it by the checking and going through our site, our official site, gerchikco.com, and there you can find different type of instruments. Except the MetaTrader platform, you actually could find different type of lessons, different type of courses about trading for beginners and for experienced traders as well, which could actually help you to rise your profit and maybe trade more systematically. So let's go through today's review and let's check what happened around the world and what kind of factors we are going to have and what kind of factors we have mainly. The news which actually released yesterday about Goldman Sachs' new review of the market, it says the recession risks are growing, but it's too early to worry. If you paid attention and if you mentioned previously during past 2 weeks, Federal Reserve System really it's like strongly is telling that it's going to tighten monetary policy, it's going to hike interest rates, but when it's actually going to happen and how harsh is going to be. As you know, that's what they say, but many analysts around the world and many stock market analysts thinks that that's kind of harsh tightening of monetary policy, that rally and that sharp interest rate hiking won't really happen. And that's the main reason why markets nowadays doesn't really fall. As you know, S&P 500, Dow Jones, and Nasdaq, the main indexes of United States stock market, the main index of 500 main companies, S&P 500, Dow Jones, which is an industrial index, and of course the high-tech index, Nasdaq, are not really falling. They've been consolidating for past month. Despite the war situation, despite the conflict which is growing in the Eastern Europe, in Ukraine, and is going to continue, is going to be actually so bloody. Despite all of these factors, we are not actually observing any kind of stock market falling or any kind of stock market collapse. And that's why we actually told you from 3 months ago, from 4 months ago, that that's not the thing that is going to happen really soon. The United States stock market is not going to fall. China's stock market is going to strengthen further. And there is only one stock market which could be under a high pressure, and it's a European stock market, which could really continue to fall. And it would be a really moderate fall, but it would continue to fall. So let's check what's going on with stock markets, check what is going on with the main indexes. For example, we're going to start from S&P 500. If you remember from past times, from previous reviews, from previous week's reviews, we actually told you that there is some mirror level which have to be retested, and after the retest of this mirror level, this main resistance, all of these indexes are going to reverse. So we told you that there is a potential of the retest of a main mirror level of 4,500 and the next reversal. And that's a picture that we've got actually. And now this downward movement from previous time, we told you that this downward movement is kind of could continue, and you don't have to wait for any kind of reversal upward movement. And as you see, downward movement is now continuing. That's what we told you from previous time, from previous, if I Remember, it was previous Thursday or Friday that we told you that there is no reason to wait for S&P 500 reversal or upward movement. It could really continue this downward movement, but there is an end to this downward correctional movement. It could really continue in long term, but really moderately, with no impulses, and it got a real good potential of downward movement to 4,300, maybe 4,250, but not more than that, because S&P 500 moderately cannot really touch all of these supports, because if moderately we get it through these supports, it would mean that prices are going to go fall further. But there is a suspicion of impulsive retest of all of these levels, 4,300, 4,250. But after the impulsive retest of the local minimums, after the impulsive retest of the local supports, we are going to have a reversal. We are going to have a consolidation. We are going to observe a stop in downward movement. We are going to observe after actually stop in a bearish trend, and then prices are going to return and reverse, but not now. Now mostly looks like that prices still have potential to continue the downward movement. Let's see what is going on with Dow Jones, with the industrial index. So Dow Jones, as we told you, have been already retested the main mirror level of 35,000, and it's continuing to fall as well. And its downward movement is not that powerful, it's not that sharp as S&P 500's downward movement. As you see, Dow Jones showing us that price is kind of located in a correction, in a consolidational movement, and this consolidational movement could continue, but there is still a potential of downward impulse or speculative bearish impulse which could happen, and we should even make prices to retest 34,000, 35,500. Sorry, 34,000, 33,500, and these supports could really get retest 3,000, 34,000, 33,500. That's the support that could really get retested, and that's the risk that is remain on the markets. But that's a speculation. You need to know that. That's a really technical speculation, after which prices are going to consolidate and rise again. So, as you see, no war, no interest rate hiking is affecting markets, and the main reason is that Federal Reserve System doesn't want it, and the other reason is that, as you know, the main effect which has today's war in Ukraine straightly is related to European market, not American market, not American stock market, but European stock market. American stock market is really rising on high-tech technologies, on the energy sector, which is now rising, and further will rise because European Union, France, Germany, and many other countries in European Union are telling now that they're going to reject Russian gas and Russian oil. It means that they're going to shift supplies from Russia to supplies from United States, and that would mean that for energy sector of United States of America, it's really good news. So the only stock market which is really under pressure, which could really fall in the near future, is a European stock market, despite all of the dovish monetary policy, despite all of the dovish speeches, all of really smooth monetary policy which they have. They are nowadays talking about the high interest rates. They are trying to cut balance sheet as a federal system done. But as you know, when you're cutting balance sheet, you don't need to hike interest rates. So this could actually help European stock market. But I'm telling you that United States stock market is kind of inside a phase that could mean that prices are just retesting local minimums, and then they're going to reverse. So you have a moderate downward movement with a really low amplitude, with a high accumulation of energy, and that's all would mean that prices have potential speculation downward movement, speculation of bears which could happen, and which could make you believe that, oh my god, markets are going to fall now, but that's not really true. So what's going on with the Nasdaq? technological high-tech index of the United States. Nasdaq showing us that price is really retesting now a good, really good and powerful support of 13,000, or as we say, 14,000, 30,500. So 30,500 is a maximum of which bears could actually retest. But after that, mainly we are going to reverse, because already we have some convergence signal, and this convergence signal in 4-hour charts in S&P 500 and Dow Jones exists as well. And this kind of signals, especially if they're forming on the charts of 4-hour chart, for example, or daily chart, they're so meaningful. And they would mean that in long term, in mid-term, we're waiting for some reversal which could continue. So when it could happen, when this reversal will happen, we don't know, but we know that before this reversal happens, we are going to have some bearish speculation on the market. So be ready for this bearish speculations. Next comes, as we actually finish stock market review, next comes the Forex market review. And as you know, we actually review the Forex market situation by the help of economic calendar. And the economic calendar of the week, of this week, could be a little bit full of different types of the releases. So let's see what kind of releases we are going to have due to the Greenwich time. Now I'm going to actually try to choose a Greenwich time so you would know when the releases will come out due to the Greenwich time. So for this week, yesterday was Monday, today's Tuesday, and let's see what kind of releases for today we have. For today, we're going to actually have only one release, one important release from the United States, which is building permits, which is kind of falling, and that's not a really good signal for a United States dollar. And this could mean that during today's European session, dollar index could fall, which means that euro, pound, Australian dollar, and New Zealand dollar could really rise in this case. So for today, it's the only important release. For tomorrow, we're kind of having some releases from Chinese central bank, and there is some suspicion about China's central bank, which is going to hike interest rates. And that would mean that prices on the stock market of China could really start to fall, and this would mean that Japanese currency, yuan, could kind of rise. So further, tomorrow we have a core CPI, Consumer Price Index, from Canada, where is no actually prognosis, but we know that on Canadian dollar, there is a really high impact of oil prices, movement shifting. So you have to actually pay attention mostly on oil prices movement if you want to know what is going on with Canadian dollar. Economic releases have their own impact, but Canadian dollar take a really high impact from oil prices shifting and moving. Existing home sales from the United States, which is going to release tomorrow and which is actually falling as well. So as you see, as we actually told you from previous months, from 3 months, 4 months ago, that after the second quarter of this year, at the middle of the second quarter of this year, we're going to have some recession in the United States economy. But this recession is not that, as we say, it's not that bad as we think. It's not that harsh as we think. And many analysts actually wanted to tell us that this would really mean that prices are not really going to fall and the stock market is not really going to crash. But many different type of economists believe the stock market of the United States could crash. This could happen maybe within some 3 months or 4 months further, but not now. That's not the situation which could happen now. It could really happen, but they're telling about this like for previous 3 months. I really didn't believe in this shit because seriously, stock market It's not falling, it's not going to fall, and there's two different type of reasons for it to continue to rise. And there was suspicion about China's market, which was really more logical for Russian market, about because of war, for European market because of war as well. And but United States market, there's no reason for it to fall. So from Newsland tomorrow at 22:45, we have the release is 10 p.m. 10:45. CPI core consumer price index, which is rising, and that's a really good sign for Newsland dollar. Next day, Thursday, we're going to that was Wednesday actually, and Thursday we're going to have Australian market releases, retail sales, which is falling. Unfortunately, you have to pay attention. Consumer price index from Europe, which is not changing. That's not a really good signal for Europe. Don't forget about it, because European recession is most thing that nowadays making markets to kind of worry. Not American, but European. Initial jobless claims, which could fall further from United States, and that's a really good sign. And this would make dollar prices to kind of rise in Thursday. So we're going to stop with this idea. Philadelphia Fed Manufacturing Index, Federal System and Manufacturing Index, which is kind of falling, and that's a really good sign. So recession is actually happening, and we actually seeing it. We can actually see this recession due to economic calendar prognosis. But let's see what kind of actual releases would be. So we could say that this recession really is kind of starting. But Federal System Chairman Jerome Powell is going to have a speech in this week, at the end of this week. So stick with that. Don't forget to check it. What kind of speech is going to be, dovish or hawkish? This would kind of change the trend of United States dollar index, and of course the stock market price as well. British Bank of England Governor Bailey is going to speak, Andrew Bailey, at Thursday. And the last day of the Friday, we are going to have the retail sales of Britain, which is not changing, and German manufacturing PMI, which is falling. That's not a really good releases for this week and for stock markets of Europe and of United States. But don't forget that United States job market is the only thing that nowadays kind of helps stock market of the United States. Job market is it's not really harshly falling. United States job market is showing us that the economy is going to get into some recession, but for now we don't really have to change interest rates. For now we can just only continue to cut the balance sheet and everything is going to be okay. But for European markets, the releases are not really good, and job market of Europe is kind of going to be under really high pressure in nearest months because of migrations, because of different things, because of war. So don't forget that here situation could really change in near future, but not that bad for the United States. It could be really worse for European market. Composite PMI from Britain at Friday, which is showing us that there is a recession. And core retail sales from Canada, which is falling as well. But as you know, if you're trading Canadian dollar, you have to actually pay attention on oil prices. And at Friday, we are going to have some speeches from banks of England and European Central Bank. So further, we're going to check the United States dollars index, and then we're going to go through Forex pairs and see what's going on with Forex pairs. So 4 hours charts, there is no divergence. Prices are showing that they're kind of shrinking, moving upward. After the breakthrough of local maximum, they started to shrink, and that's a sign of reversal, but there is no sign of divergence. So I'm actually gonna stick with that idea that prices now are retesting a real important psychological level of 100. Maybe they're going to make some speculative downward impulses, but mostly they're going to rise further, and it could be a really impulsive rise, which would be another type of speculation. But here, this type of volatility shows us that prices are inside a really high shrink volatility, which could cause next downward movement, which could cause next reversal. So on the 15-minute chart, we had some divergence, a really moderate divergence sign, which already got their targets. But for reversal, for a really strong and as we say, reversal which could continue for long, we need prices to get under 150, at least 140. So before we get under 150 or 140, we cannot say about a really powerful reversal. Prices could actually make some downward correctional movements, but they are not going to reverse. They are not going to reverse that much. They are not going to continue this downward movement for long. But this could be finished. This movement could finish in midterm, in short term, by the retest of 160, 140. Don't forget. So dollar index for nowadays is showing us that prices kind of, due to the previous downward impulse and due to this accumulation of energy which we have now, we can say that prices maybe are going to further fall, but this downward movement is going to finish in near future. So you have to actually stick with that idea, and you have to stick with the idea that prices could really retest 160, 140 at the near future as well. So we're really near to these levels. We have a really shrink volatility after an impulsive retest of these levels, and this is actually a mirror level after the retest of which we have to actually reverse. But mostly we cannot really say that prices of dollars are going to rise further. To check really what is going on with dollar, we actually have to check the oil prices. And oil prices, if oil prices start to rise, then dollar prices could reverse. But here, unfortunately, on 15-minute chart of oil prices, we are observing an divergence with shrinking of volatility while we are rising and after the breakthrough of local maximums. That's not a really good sign. It means that oil prices in near future, in short term, could really reverse and could make some downward speculative movements, which could help dollar's index to move more faster and more sharply to next supports. So there's some suspicion that I think that in the near future we're going to have some speculation on the markets, but after that prices are going to return in normal phase. So speculation, which I think that would happen, is the upward speculation. It's the bullish speculation on dollar prices, bearish speculation of stock market, and the bearish speculation of oil prices. So we have to be ready for that. And if in the near future we are going to have some upward impulses in oil market, this would mean that prices in midterm could continue to fall. But I don't really believe that oil prices could continue to fall in midterm, so I would say that here the main speculation could be bearish, not bullish. So let's see further what's going on with the Forex pairs of euro dollar, and then we're going to check pound dollar and Australian dollar as well, and the New Zealand dollar to United States dollar. So as we see here, prices are really consolidating, and they've already retested the local resistance. 1085, maybe we can say 1082, 1085, 1084, let's say 1085, 1084. These are levels which could get retested, but I don't think that in the near future they could get, the prices couldn't really get strengthened above this level. So we have to wait for next price movement. There we have a really high and really strong accumulation of energy, and any downward impulses in near future could mean that prices further are going to rise. So It's really this depends on dollars prices reversal, which could happen, but dollar prices, because of Federal System monetary policy tightening and the probability of Federal System monetary policy hiking in the near future, is not going to fall that further. So the main thing that we can say is that oil prices are going to rise, dollar prices as well are going to rise, and the main trend on the markets could be really under pressure. It could be really low volatile, and it could be really like this, like as we see here. It could really continue to be like this, because while oil prices and dollar prices are rising together, European currency, Australian dollar, New Zealand dollar cannot really rise, and they would show that they are rising, but inside a really thin channel. So because of all these factors, maybe for this week we're going to have a really consolidated, really thin and shrink volatility, and the continuation of the main phase of prices would really be the more logical, and it could be really realized in this week. So what's going on with pound prices? P to United States dollar. As we see, pound prices as well showing us that it have already retested the mirror level. It had a really sharp downward impulse, and mostly it's going to rise further, but we have to be so careful, because dollar prices maybe could start to rise again after a short stop of bullish movement. So here we have potential of upward movement, but we have to be really careful that pound, euro, Australian dollar, and New Zealand dollar are going to reverse in the case of dollars prices rising, which could happen. So Australian dollar and New Zealand dollar are showing us that because they are mostly related to oil, they are not really falling due to oil. If we check 4-hour chart, for example, the main thing that we're actually observing is that they're retesting a mirror level, and they could make some bearish speculations, and then they're going to reverse. So they've already started to reverse, but we can say that in midterm there is still a risk of downward movements, of downward speculation, or bearish speculation. And let's see what's going on with NZD, New Zealand dollar to United States dollar. New Zealand dollar to United States dollar as well is showing us that prices are retesting a really important support, and they need to reverse in the near future, but there's still a risk of their downward movement. So now we're actually return back to the prediction about dollar prices impulsive speculative upward movement, which could happen. So here we mainly are going to reverse, but we have to be aware of the probability of some speculative movement, sharp upward speculative movement of dollar prices. And next, let's check what's going on with natural gas, which is rising and which could continue to rise. As you remember from previous times, we told you that prices of natural gas are going to retest $8, $9, and going to rise further. As you see from previous time, we've been around $7 and we've been around $6.50, and we told you that prices are going to rise despite all of this gas supply from the United States, despite all of this higher supplies which they are kind of targeting to reach, because of the situation which we have. And as you know, it's so hard to reject Russian oil due to sanctions by Europeans. It's really hard, but they're going to do it, and all this makes markets to the demand of gas to go higher. So we cannot really wait for any kind of downward movement for gas. There's this correctional movement which could finish in the near future, but mostly we're waiting for some reversal and the continuation of upward movement. So here for gas, as I said, $8 now. Maybe we're going to retest 7 again, 7.50, and then we're going to go through 9 and further. Let's see what's going on with United States dollar to Canadian dollar, which is related to gas prices, to oil prices, I'm sorry. United States dollar and Canadian dollar showing us that they are consolidating further because oil prices are rising and dollar prices are rising as well. So here the only thing that could help the situation is the oil prices reversal for a really short time, which could help these pair prices to retest 1.27, 1.2650. And after the retest of 1.2650, 1.27, prices mostly are going to reverse and go further, fall further, because oil prices mostly are going to rise further and dollar prices in midterm are going to fall. So here's such a prediction. Let's see what's going on with the gold prices. Gold prices which rising, and as you remember from previous time, we told you that gold, silver, and all the commodity are returning into really bloody assets because they're going to rise maybe at nearest future because of the situation, war situation which we have. And as we told you, the moderate upward movement is continuing. We told you that after the test of 1,900, 1,880, we're going to have a reversal, but it's not going to be that sharp. And we told you about it about maybe 3 weeks ago, 2 weeks ago, that we are going to retest 1,900, 1,880, and that's the situation which we actually had. But we told you that the reversal after this retest is not going to be that sharp. So as we see, this reversal is kind of even consolidational. It haven't even break through the local resistance. It's now retesting it, but this pattern here is not really, it's kind of disappointing because that's formation, that's a reversal formation. That formation is showing us that volatility is getting wider, and that's not a really good sign for further upward movement. So here mostly we can be sure that prices have been retested $2,000, which is a psychological level, and they are going to fall further. So we could have some upward impulses, we could have some upward speculations, but mostly at midterm we're going to reverse from 2,000 downward, and stock markets are going to hike, going to start to rise after some bearish speculation on the bottom of the market. So that's the main situation which we are going to have. And as you know, nowadays the correlation between gold prices, between commodity and stock market is kind of getting more powerful. And this correlation is opposite correlation. When gold price rises, S&P 500 goes down. When S&P 500 strengthen, gold prices start to go down. So there is such correlation that we are going to have nowadays. And the other correlation, which is really important in the markets, is the United States dollar correlation with oil prices, which is going to still be on the markets for next years. Actually, it's not going to get ditched, despite some of, as we say, gossips. So what's going on next? We're going to check the prices of silver, which have to actually start to reverse as well. Silver prices nowadays. So this situation with silver prices exactly opening of a gap means that prices are going to fill this gap, or they're going to complete it. They're going to go downward. The retest of local maximum, an impulsive retest, and the stop of upward movement. Here we have mostly we have divergence as well. Let's see. Here's the divergence, and there's too many signals for commodity markets to reverse, but they could make some speculative upwards impulse, and after this impulse they're going to return and they're going to reverse, and after that they could continue the downward movement in midterm. So don't forget about this. Maybe after some bullish speculative movements on especially on the commodity market, we are going to have a reversal and midterm reversal, which could actually cause the midterm upward reversal of stock market of the United States. Because if we're going to have some high tightening of China's banks monetary policy tightening, this would mean that China's stock market is going to a little bit fall, and that would help United States market to go further, to rise further. So, and next comes the United States dollar to CHF, to Swiss franc, which is a defensive asset, which is a risk asset like gold, like silver, Swiss franc, and Japanese yen. Here we have a really sharp divergence due to 4 hours chart, which is a midterm chart, and this would mean that after nearest impulsive speculative upward movement and the retest of 0.95, we're going to reverse, and we're going to reverse maybe at the midterm. But let's see how dollar is going to behave himself, because if the amplitude is going to be under pressure on the dollar chart, that would mean that prices are not going to fall that much. So dollar prices could really continue to rise in this such a pressure and such a channel. But if it start to reverse, or if it start to get under the local maximums which it has, get under its own local resistance which it has, after that there's more probability, there's a high probability of the continuation of downward movement continuation. And United States dollar to Japanese yen. Let's see what's going on with that. Here we are observing after really impulsive upward movement which continues. And if you remember from previous time, we told you that dollar to Japanese yen is going to continue this upward movement. Despite this downward movement, despite this retest, and despite this movement stop after the retest of local resistance, we told you from previous times that prices are not going to really fall that much. Don't believe that, because Japanese yen is under the pressure. It's going to be under pressure because of monetary policy. Maybe in near future they're going to change this monetary policy, but mostly Japanese yen is way more weak than United States dollar. So here's the situation which we are going to have, and which could continue to 130, 135 even. So don't close your eyes, and don't forget to check this pair, because it's a really interesting pair for nowadays. And we're going to get through the Bitcoin and the cryptocurrency market. Let's see what is going on with Bitcoin prices and Ethereum prices. From previous time, we told you that prices of Bitcoin after the retest of 47,000, they're going to reverse, and this reversal happened. We told you that there is a potential of the retest of 47,000, then prices are going to reverse, and that's the situation which we had from previous times, as we told you. And we told you the downward movement is going to continue. Maybe we are going to have some correctional upward movement, but mostly we are going to have the continuation of downward movement. Even if we're having some local supports nearby, but that's not a really good reason for next upward movement. Just look how impulsive is this reversal, this momental reversal. It's really impulsive, and that's not a really good reason to trade this. This is not a really good reason to buy this here. And 45,000, I'm sorry, but I cannot say that. 42,000, 43,000, maximum 43,000 is a level which could get retested, and prices are going to fall further. So before we get stuck above 43,000, we cannot say that prices are going to rise further. If we get stuck, if we get strengthened above 43,000, that would be a really good sign. But if we get stuck under 43,000 in the future, or if we retest it really impulsively, or if we get a shrinking volatility while we're getting near to 43,000, this would be really bad signals for buyers. So this would be a really bearish signals. You have to pay attention. And let's see what is going on with Ethereum prices. So Ethereum prices now showing exactly that prices after the retest of 35,000 to 3,500, they have already reversed. And as you remember from previous times, we told you that after the test of 3,400, 3,600, prices are going to reverse. Prices of Ethereum are going to reverse, and they would continue this downward movement. Here we had an impulse, which was which happened after the retest of some local support, and prices in near future could really speculatively retest 3,200, 3,400, but that won't mean that prices are going to continue this upward movement. Mainly, we are going to have the continuation of downward movement in the near future. Thank you guys that you watched this video. Don't forget to subscribe on our channel and ring the bell so you won't forget and you won't miss any kind of online products which we're going to have further. Don't forget to check our website and use our different instruments for trading. Until next time guys, have good tradings, take care of yourself, and bye bye.